Hello, everyone, and welcome to Stablecoins Are Killing It, episode number 16. I'm your host, Lou Kerner, with Just Stable. And in addition to this show, at juststable.com, you'll find our Web3-enabled stablecoin message boards where you can talk about any of the topics we talk about here on the show. We've got a great show for you today, featuring Paris-based Matthieu Saint Olive. Hey, Matthieu.
Hi, Lou. Thanks for having us today.
And our other featured guest is a colleague of Matthieu's, Ludovic Courcelas, Government Strategy Lead at Consensys. Welcome, Ludovic.
Thank you so much for the invitation. Very glad to be here.
And so Ludovic and Matthieu are going to walk through a presentation. It's not very long. My guess is I'll have some questions as they walk through it. And then when they're done with that, as we do with all of our shows, we'll open up to Q&A from the audience. So if you have a question, please put it in the chat function on Zoom. And if we pick your question, we'll let you know via the chat, and we'll bring you up as a panelist so you can ask the question and follow-ups as a panelist. And with that, Matthieu, I'm going to make you a host, and then you'll be able to grab the screen and walk through the presentation. Matthieu?
Great. So you need to stop sharing your screen.
You should be able, yeah, okay.
Continue. No, maybe I can make it. Okay. This works. Great. So hi, everyone. Very glad to be here today. My name is Matthieu Saint Olive, and I'm Consensys CBDC lead globally. So really excited about central bank digital currencies and stablecoins. Maybe just a brief overview of Consensys. Consensys was founded in 2014 by Joseph Lubin, just after he co-founded Ethereum. Consensys changed a lot since its inception, from a startup studio to an advisory firm. And now we are focused as a software company. We have four main products, which are Infura, the main gateway to Ethereum; MetaMask, one of the most adopted wallets with more than hundreds of thousands of users; Consensys Quorum, the open source software Ethereum client; and Consensys Codify, our application suite for finance and decentralized finance. So at Consensys, we're really working, really focused on CBDC. We've done a couple of projects, and we are currently engaged with 4 central banks today. And as much as we can, we also publishing a lot of thought leadership papers, participating to webinars, to working groups, because we are really convinced that CBDC is about a consortium play. It's not about a single company building this infrastructure. It will really be need to involve not only central banks, but banks, fintech, payment companies, etc. So just a brief overview.
And Matthieu, just go back for a moment on the central banks. When you're advising them, what are the major areas that you're finding that they need help with or want help with?
Yeah, absolutely. So we're not really advising them. We are more building some infrastructure for them to showcase the possibilities of CBDC. So basically, a lot of the questions they have is, how can we have control of the CBDC in a distributed network? How can we manage privacy? Can we handle high transaction throughput for retail usages? How can we manage delivery versus payment for digital assets which are tokenized? So those are the main questions central banks have for us.
Thank you.
So we really observe different trends in blockchain and payments, which are really exciting. So on one side, we see all this amazing innovation happening on the public blockchains with stablecoins, which value has just tripled in less than 1 year. And then on the other side, we see those established companies who actually process much more value than what is happening on blockchain. And even those companies are actually looking very, very closely at blockchain and its application for the payments. And on our side, one of our key objectives is really to bring those two worlds together so that all this amazing innovation happening on the public blockchain can really be expanded and reach mass adoption. So when it comes, another key trend is really about CBDC, and CBDC is a driver for other payment companies looking at blockchain. So today you probably know those numbers, but 80% of the central banks globally are working on CBDC, which is huge, and 40% are experimenting on it, which means almost 70 central banks in the world are experimenting with CBDC. So we won't go into the details of each project, maybe just to mention some highlights about the biggest project. There's obviously the project in China, which is quite advanced, and it's very private. They do not share any information about this, but everybody is trying to look at it very closely. Then we also see emergence of CBDC project quite advanced in developing countries, including Bahamas and Eastern Caribbean, which are really advanced, and which plan to go live by 2021. So we might see the first CBDCs by next year. And then a couple of other projects with different levels of progress. One thing when you say about CBDC, there's two main kinds of CBDC. One is wholesale CBDC, which is basically, so there's two kinds of central bank money. One is wholesale for interbank settlements, basically to facilitate and enable all this market of capital market and asset management. And the second one is retail CBDC, retail central bank money, which today is cash. And retail CBDC could be a complement to cash, some kind of digital version of cash. And what's quite exciting is that we see this innovation from the central banks, which are more or less competing or complementary to the innovation from the private sector. I think this slide speaks for itself. CBDC is happening. Lou, you are on mute. I see you.
Yeah. Sorry, just for a moment, if you can just go back to the prior slide. Because right, if central banks do the retail side, do you see many central banks desiring to have a direct contact with retail, or do you think most of them are going to go through commercial banks?
I'm almost fully convinced that they will go through commercial banks, but not only commercial banks, probably also large payment service providers, fintech, because accessibility to this network will be much easier than what it is possible today with their infrastructure, which is called RTGS. And I think the central bank don't have the capabilities to handle direct contact with individuals. They cannot handle compliance, onboarding. It's not something they can do. On the other side, commercial banks have been doing this for years. They've never really monetized this because they were offering packaged services. But I really believe in this two-tier distribution model, where the central bank is the only one responsible to issue the CBDC, and then a commercial bank to distribute it. And one of the amazing benefits of using blockchain, in particular Ethereum, obviously, is that you have the end users who can be in full control of their funds, even if the issuance is fully centralized by the central bank.
And so do you see there being a big opportunity now that the commercial banks are at risk, now that probably more nimble fintech folks are going to have, fintech players are going to have direct access to the central bank in a way that they didn't before?
Absolutely. I think so in the last years, central banks basically had the monopoly on individuals' deposit accounts. And because they had this monopoly, they were not really focused on the services they were offering. And here, thanks to digital, we see this fintech, blockchain or not blockchain, even Revolut, who are really focused on providing the best user experience for specific services and who are much better. When you look at the difference between sending money to a friend with a bank account or with Revolut, it's a no-brainer. Revolut is way easier. And so I think commercial banks will have to embrace the technology basically and find their new role in their interaction with the individuals. and they have to do it very quickly because whether there is CBDC or not CBDC, private initiatives are competing, and there is a risk for them to be disintermediated, absolutely. So just a couple of comments. When you look at all the think tanks, NGOs, etc. in the world, all of them are saying that central banks are taking CBDC very seriously. It's not just an innovation project that they do on the side. And some of the main reasons why they are considering CBDC is to ensure monetary sovereignty against the decrease of cash and increase of privately issued money, and basically adapt to the digitization of our economy because people are less and less interested in physical cash, and then improve financial infrastructure and efficiency. One of the key and very amazing aspects of CBDC or token in general is the programmability. And so you stop using these fixed assets, but your asset can live and can interact with so many other things in our digital world. So I think we address this. The main topic I wanted to raise here is about this two-tier distribution model. So we already covered this. Another thing is I really believe in a public platform model where there is this infrastructure that will be built by central banks. And then on top of this, commercial banks, fintech, private companies will be able to create amazing new innovative services, similar to what we see in the public blockchain today. And I think this will really foster digital innovation and adoption of blockchain technology. And here I think there's a real opportunity for private companies to build the services. It is happening now. It will happen. So I think there's great opportunities for new businesses here. Just looking, so I have one last slide on my side. There's a lot of discussion about is blockchain relevant for CBDC, because people say central banks will have the monopoly to issue CBDC. So does it make sense to use a distributed network? When we see first what is happening around the world, most CBDC experimentation use blockchain. So this is a fact. Maybe only the project in China do not use one because they need such high throughput. I heard about 80K TPS, which is just huge. So they do not use blockchain, but all others use blockchain. And I think the main reason why we need blockchain is that this is a distributed network between the central bank, the individual, the commercial banks, and blockchain is the best technology to ensure trust in this kind of distributed network, while making sure the individuals still have full control of their money. So I think it's very important. The second one is really about innovation and all the benefits that comes with money programmability. People on this podcast probably know it, but when you speak with legacy companies, they're a bit lost about what does it mean, money programmability. But I won't go into the details. And I think
Matthieu, one of the more interesting things when I've heard folks from the from the Fed talk about the stable coins and their deployment of stable coins is that they don't think that they'll have smart contracts on top, that they won't be programmable due to the risk of enabling that technology. Do you see that, do you see other central banks having that same philosophy, or do you think most will, enable programmability?
No, I'm a bit surprised, but what you're saying, I've not heard this before. So far, I've mostly heard that they were actually very interested in this, not really understand all the possibilities of programmable money, but really interested in this. I think even the project in China, which do not use blockchain, actually use smart contracts and cryptography. So I would be surprised that the CBDC, we lose so much. If we create a CBDC, which is just about transferring value from one individual to another, it's good, but that's just it. if we bring more programmable money on top of it, this is where it gets really exciting, I think.
Cool.
So maybe last 2 comments on why blockchain and Ethereum. I think it's important to highlight that Ethereum is mature enough for meeting the requirements of central banks, in particular in terms of privacy and scalability. There are amazing technologies like zero knowledge proof and rollups, which can be used in those contexts, and I think will be used in this context. And finally, the fact that it's open source, it's a no-brainer. It brings lots of benefits, and the largest, Ethereum is by far the largest developer community. So I think central banks, and it's kind of difficult sometimes to discuss this with central banks, but saying that the developer community is here, the standards like ERC20 are there, I think it's really important, and it's key for them to grab this. So Ludovic, for the last.
Thank you, Matthieu. I just want to come back on the previous point of the central banks and what they are looking for regarding smart contracts and programmable money. I've been working during the last 2 years with the European Commission, advising them, and I can assure you that at least in Europe, all eyes are on programmable money and on smart contracts when it comes to discussions about CBDCs. That's really the end goal. That's what everyone has in mind, both from a low-level perspective when you want to ensure some key rules and regulations such as anti-money laundering, but also at the more higher level when you have to transform business rules into a set of existing programs, and so that's really what people have in mind. So this slide is just really to build up on what Matthieu was saying, and the fact that it's really all about programmable money. And so you have to see stablecoins and CBDCs as part of a larger ecosystem that is currently moving towards programmable money. So this is really what you can see here, where you have traditional actors, historic actors that are currently working on using blockchain technology in order to offer decentralized solutions. What you can see on the right, of course, are first movers, actors that we know very well when you're in the crypto industry, and that are already implementing those ideas that are maybe a bit, maybe 2-3 years away from some of the actors that are on the left. And so what is interesting here is that when you look at programmable money, CBDCs and stablecoins have a role to play in this ecosystem. And so I think that might be one of the aspects that we want to discuss later on in the discussion, and why I wanted to bring up that full picture of the DeFi ecosystem that is currently maturing.
Yeah, absolutely. And maybe just to build on what you just said, I think issuance of CBDC does not mean stop death of private stablecoins. I mean, we already live in, so even without blockchain, people who are not in blockchain, they already have different wallets. They have Revolut, they have Lydia, they have their bank accounts. We already have money in different places, which is already a different paradigm. And I think we'll see different use for CBDCs than from stablecoins, and it's not one win and takes all. You can stop sharing your screen.
Okay, terrific. So we are going to now open it up to questions from the audience. And let's see, so we've got the first one from, hold on a moment, from Lori Caval. And Lori, I'm gonna make you a panelist in just a moment. I've got to reclaim the host in order to do that. And now, Lori, you're now a panelist and able to ask your question. Lori?
Hi. My question is, what countries are likely to deploy CBDCs first?
Yeah, I think Eastern Caribbean, Bahamas are very advanced. And not only they're advanced in their project, but they want to go in production, which is not the case, for instance, for Sweden, which is very advanced, but is still uncertain on whether or not they want to go live or remain at the pilot. They're still at this assessment phase, saying, okay, if we issue CBDC, what's the impact on the banks? What's the impact on the financial stability? Because that's the mission of the central bank, to ensure financial stability. So yeah, I think this will be mostly developing countries. And maybe one last thing, there's a lot of discussion about what's the race. Is there a race for CBDC? Is it, does the first mover has a huge advantage? I think there are so many aspects in the design of the CBDC, so many possibilities in how you implement it, that the best move is to build the best CBDC, not really to build the first one. But to answer your question, I think the first one will be in 2021, probably by Bahamas or Eastern Caribbean, maybe Cambodia also is quite advanced.
Okay, thank you so much. I appreciate it.
Okay, terrific. Our next question is from Ganesh. Ganesh?
Hi everyone. I'm Ganesh. I'm a researcher at.
Oh, sorry, Ganesh. I'm good. I need to make you a panelist again. Hold on just a moment. Apologize for that. One moment, Ganesh. Nothing's easy. There you go. Ganesh, you're back. You should be back.
Welcome back.
Yeah. Okay. Yeah. So my question to Matthieu. So on the Ethereum use of Ethereum blockchains, I guess one question I had was on scalability, whether a permissionless blockchain could incentivize miners to be able to process like a lot of transactions without kind of raising gas fees too much. And in general, like, do you think that maybe the solution is to have something like Ethereum, but to permission it to like a set of validators that could cut down on costs? But yeah, that's my question.
Yeah. So it is very likely that central banks, or I would say even very, very likely that central banks build CBDC on permissioned networks because they want high control. So in the short term, I don't see them issuing it on public blockchains. I think so with public blockchains by design, you're limited to a couple of, let's say 10 or 15 TPS basically. There are some amazing scalability solutions. The most promising one are called rollups, where basically you manage all the execution of the transaction off-chain, and you use the blockchain for what it's best at, which is the consensus and the data availability. Some of the most advanced projects are like Loopring, Startware, Omizedo, Matter Labs. There's a couple others. And then when it comes to scalability for CBDC, so they will use private networks. With private networks, you can reach a couple of hundreds of TPS, but for retail, so it's okay for wholesale application, but for retail applications, it's not enough. So basically, the same layer 2 scalability solutions will be built on top of it, which actually is not even if we say it's layer 2, it's not a problem. In the design, it works very, very well. You can enable privacy, you can enable programmability. It's not fully ready yet, programmability, but it will be in a couple of months. So yeah. Does that answer your question?
Yes. Just another point is, what do you think are the main benefits of using like the Ethereum blockchain relative to just having a private ledger that currently central banks have?
Yeah, good question. So because we have this two-tier distribution, there's a couple, but for retail, because you have this two-tier distribution model, it's just going to be a nightmare for the central bank to fully manage everything. to manage the onboarding of users, to manage the maintenance of the balances. It's not something they're really good at. So they need to onboard commercial banks to facilitate the distribution. And at the point where you onboard the commercial banks, you have this distributed network, and if you're on a centralized system, you will have to basically trust that the commercial bank do not issue more than what they have acquired from the central bank. And so you have this distributed network, and blockchain is today the best technology available for green trust to decentralized networks.
Okay, thank you.
Okay,
Maybe
thanks.
also to build on that. So I think that there is one major aspect that we have touched upon before, which is that in the end, having a CBDC is not the end of the journey. And so if your ultimate goal is to have programmable money and to do something with your CBDCs, you will want to build on the ecosystem that has the strongest amount of developers, the strongest set of standards, and that is currently Ethereum. And so, of course, for creating a CBDC, any protocol could do it, but it's really for the second phase and what we will do with those CBDCs that it makes sense to build on Ethereum today.
Exactly. You really have to think about CBDC as a platform. So first, we create the money, the money that can be exchanged between individuals, companies, and co. But then private companies will come and bring innovation. And it is very important for central banks. Fostering innovation is very important, is one of the objectives of central banks when building a CBDC. And this is possible with blockchain. Obviously, you can say that there is open banking. We can already provide APIs to connect to each other, but just as a fact, we see the difference between the innovation happening thanks to open banking and the innovation currently happening on Ethereum mainnets. It's just really not the same thing.
Okay, thank you.
Yeah, thanks, Ganesh. So if anybody else has a question, please type it into chat. I'll take the next few questions. What do you think has been learned to date from the CBDC trials that are in process?
I think one of the key learning is that the technology is mature enough. That's really one of the experimentation. The technology is ready to go and to be implemented, and we are not in a R&D phase. I think, then to be honest, I think a lot of the challenges with CBDC are not really about the technical aspect and the technology we will build, but more about the assessment of what will be the impact of CBDC, what will be the impact on commercial banks, what will be the impact for cross-border payments, and all of this. And this is taking a lot of time for central banks to get an opinion about this and to make a proper assessment. So, yeah.
Anything to add,
Ludovic?
No, I completely agree with Matthieu. That's also what I can currently see from the results of the experimentations. That's pretty accurate, yeah.
And when you're talking with different countries, are there advantages that you talk about to being an early mover with CBDCs that will accrue to the first countries that issue these digital, the central bank digital currencies that might not accrue to the later entries?
Yeah, I think that's one of the ambition of China, at least. And because of their move, a lot of central banks are taking it very seriously. I think central banks are actually some central banks are actually more afraid of the Chinese projects than they are afraid of Libra. We have not mentioned it so far, but obviously it's also the elephant in the room here when we talk about CBDC and stablecoins. I think maybe in a couple of countries where countries have very close economies, and there is a risk that individuals shift towards the other country next door means of payments, it would be a risk. But I don't think it should be a key concern of the central banks. I think they should move quickly because there is a need for it. And it will bring a lot of benefits to the individuals. I think that's very important to say. I'm sure that CBDC will bring a lot of benefits to individuals. But it's more important that they design it properly. For instance, I think they shouldn't go with a very closed system, centralized, etc. People do not want siloed system anymore. People want open stuff to be built upon. So I think it's more important that they take their time to get convinced of this rather than rush and build something which is not relevant.
Okay. And then, so when you were talking about China, do you actually think in that they've spurred other countries that China's CBDC could in any way be a threat to the US dollar status as the global current, reserve currency?
It's one of the objectives which they openly communicated. I don't remember the name. I think it's the Silk Road. No, I don't remember, but yeah, it's one of their objectives to compete with the US dollar dominance. I don't think it will happen anytime soon, to be honest, but definitely one of their objectives. But then I'm in a software development companies, so those kind of topics are I don't understand everything or master everything about this.
Okay. We have next question from Alexander. You're now a panelist, so you need to unmute yourself, which I guess you are. There you go.
Yeah.
Welcome.
Hi. Yes, I have the interest to the CBDC as an enterprise architect. So typical questions what people asking that is, yes, we need two main features, critical features, that is a legal tender, okay, and that is legal finality of payments. So on your slide 9, I think, when you list different features, you did not mention these two features at all. How do you handle these features on them? Maybe central bank did not ask you about these features, but from the systemic point of view, they're very critical. Thank you.
Legal tender was probably not mentioned. I think transaction finality was. So I think legal tender is legal concern. So basically they can handle it. Similarly to today, it's already possible to issue e-money on blockchain, and it has it's legal money. It is money because it is e-money, it is money. So for instance, there's this company which we are very close with, which is called Monerium, who was the first company to be licensed e-money to issue on blockchain in Europe. They're based in Iceland, and earlier this year they passported their license into all European countries. So it's really exciting. So the legal tender, I think it's not a big deal. When it comes to finality, so one thing first, which is very exciting, when you have this natively digital cash compared to the money infrastructure we have today, is that the payment and the settlement can be one single thing. So in today's world, when you pay with your credit card, it says you have paid, but the settlement only happens 24 hours later. With blockchain, the two actions are basically the same. And so that's the first part of the answer, I would say. And maybe the second part is that one of the complexity that people often raise with blockchain, public blockchain for finality, is that one block is processed every 14 seconds, and you have this probabilistic finality. When you implement
probability, it's not
exactly. But when you implement it on private blockchains,
legal finality.
Yeah, absolutely.
That is there's some kind of tricks in definition. They say, yeah, okay, so we are not sure. So
yeah, absolutely. So that's the reason why, that's one of the key reasons why I believe that central banks will actually implement their CBDC on private networks. And when you deploy a private permission network, you can basically configure all of this. And so for instance, you can have a new block every second, which is very, very important when you deal with a payment system. You want transaction to be processed as quickly as possible. And you can also implement other consensus algorithms, which are different from what is happening on mainnet with proof of work. You can implement what we call Byzantine fault tolerance consensus algorithms. And here you have finality of transactions.
yeah, but it's not deterministic.
It is deterministic. Well, when you use, in general, proof of authority consensus algorithms, it is deterministic, and you cannot get back in the past as what we can observe in public blockchains.
Yeah, but legal finality is different, so you don't. It's not question going past. So if you have legal case with your money, that people cannot say that, ah, yes, please return me money which I paid for you. So you see, it's different things. Okay, it's required some kind of more deeper examination this issue. Is it possible to implement in blockchain? And if yes, how? So it may pose some kind of restrictions. Okay, thank you.
Okay, thanks, Alexander. Next question is from William McGuire, I guess, who is driving at the moment. So he asked for you to comment on the regulatory environment and specifically to the degree that you think that central banks, how they're going to look at stable coins and whether they're going to be comfortable with stable coins like USDC or USDT circulating in their countries.
Yeah. So I think regulators do not want to stop the innovation happening with stablecoins. So I think they will definitely continue to exist. What will probably happen is that they will, so stablecoins will be asked to be regulated. For instance, in Europe, the relevance, so there's a lot of discussions at every level. So there's not a good answer yet, but it's very possible that stablecoins will have to be regulated e-money to be used massively, I would say, in Europe. And it's already happening. I was mentioning this company Monerium before. One of the terms that people start to use is e-money token. So saying that when you think about stablecoins, the value is not always very stable. Sometimes it fluctuates around $1 to create the incentive for people, for instance, to collateralize with DAI, etc. And so, yeah, it will continue probably under the e-money license. And for the other jurisdictions, I'm less an expert, but probably quite similar.
Okay.
Maybe to add on this, so if we foresee a bit what CBDCs will be like, so there are two scenarios that lie in front of us. The first one is we get CBDCs that have similar features and similar usability with stablecoins that currently exist. In that case, there is absolutely no reason to continue using currently available stablecoins, and the natural switch would directly go to the central banks. And here I'm talking really about if the features are exactly the same, if there is no restriction using them, and if the usability is similar. So in the end, in that scenario, there wouldn't even be a necessity to regulate and to not to regulate, but to kill other stablecoins, because the question is a bit formulated in that sense. Will allow stablecoins to continue growing. So I don't think that it will be the case that they will want to kill. But there is also another scenario that is likely to happen, at least in somewhere in the world. It will certainly happen where you have a CBDC that doesn't have a lot of a similar level of features, and here in those cases, it is likely that the current stablecoins will continue growing. Also, there is the how fast central banks are going to continue innovate. We know that companies in the space at the moment continue innovating. I'm not sure that this might be the case at a similar pace for central banks. And so those are really the questions that we need to ask ourselves when it comes to comparing CBDCs to other types of assets.
Okay, and actually, William asked, even though he's driving, if he could come on.
Yeah, sorry. Thanks, Lou. I just arrived, so I have to keep my mask on. I'm going somewhere. So no, I would ask you, my counterpoint would be to what you said, is that, but central banks are not trusted necessarily by people. So even if they have a stable coin, it doesn't mean everybody's going to go to them, no?
It's 100% true, but projects that issue stablecoins are not 100% trusted either. So for stablecoins to be successful, or a CBDC to be successful, you just need to be better than everyone else in the market. I think that it could be very easily achievable. And so ultimately, you will still have hardcore fans that say, no, I'm never going to put my money into something that is controlled by a central bank. And that's fine. And this is why we are going to continue to have those projects. But in terms of trust, I'm not sure that central banks are that far behind.
No, I think we, for 99.9% of the population, central bank money is by far the most trusted and relevant, and not relevant, the most trusted form of money. It will depend, however, I would just highlight this, it will depend on the countries. So I think it is the most central bank money in Europe, for instance. When you go in Venezuela or this kind of countries, obviously the paradigm is very, very different. And here CBDC will be tackled very differently.
Exactly. I mean, some countries are not, don't have the luxury, like Argentina and Venezuela, Lebanon, so many other countries right now with their central banks are not in a good shape. But yeah, I think there will be competition.
Yeah, there will be competition, and maybe if we push it a bit further, maybe it's also an opportunity for central banks to regain some kind of trust by having more open systems in which they are not controlling everything, but reconnecting with the country, basically. So it could be interesting to see how it goes.
Okay, you good, William?
Merci, merci.
Okay, terrific. Thanks a lot for the questions. So I'm going to take the last question. We always finish off with the same question, and that, what do you think that we're going to be talking about if you were on the show in a year from today? What do you think we'd be talking about a year from today that we're not talking about, that we didn't talk about today?
Ludo, you want to start?
Yeah, sure. So I will start with the second one. Things that we will not be, things that we will not be talking about in a year. At least that's what I hope. I hope that transaction fees and transaction throughput are going to be things that we will not be talking about in a year. I'm actually quite convinced that this will be the case. Matthieu was mentioning that technology is ready. That's the case. We have even better systems that are going to be implemented in the coming months. Rollups is certainly one of the most promising, as Matthieu was saying. And so I'm maybe a year is a bit too optimistic, but at least this is the trend that we are currently seeing.
That would be exciting. Matthieu,
So,
you got the last word.
So the thing we won't talk about, what I would love to is to hear that blockchain and crypto assets are used for illegal purposes and that we should not trust it. I hope we'll close this debate very, very soon. And for what we'll talk about next year, that's what we are saying before the podcast. The technology is moving so fast. I think the things that we will talk about next year is not created yet. So developers, entrepreneurs, engineers, please start working on this and help us dream about it.
That would be exciting. Well, look, this has been a great show. Thanks a lot, Matthieu. Thanks a lot, Ludovic. This is, I thought we laid down a lot of knowledge for the folks watching today. Thanks for everybody who showed up live, and invite everybody to come next week for Stablecoins Are Killing It, episode number 17, which is going to feature the team from Terra, which is one of the more interesting projects in the space that's actually out there and has customers in Korea that's scaling using their technology. So super interesting project. And again, thanks a lot, Matthieu. Thanks a lot, Ludovic, and we'll see everybody next week.
Thank you for inviting us.
Thank you so much.